You have to finance the U.S. government at any and all costs. The U.S. government is going to shut down. To you, as a Bitcoiner, there will be an open competition for who can do it the best. And Bitcoin is in the heat of that competition. Bitcoin and gold are winning by a mile, and Bitcoin is going to smoke gold over the long term. Bitcoin will soar to the moon. We'll all move on. Multipolar world. Fair. Okay? If someone tries to convince you not to buy Bitcoin, they're going to have to print the money. They're going to have to debase the dollar. Are we going to be living through a depression? No. We're going to live through the silent depression, not a great depression. The silent depression is they're going to debase the dollar.
The US government is shutting down, and now crypto investors continue to speculate if the bull run will commence in October. Today we are joined by Jack Mallers, who shares his insights into the price action and market dynamics for Bitcoin and why he's bullish in 2025. As the CEO of Strike, Jack Mallers says Bitcoin represents 1% of the world's wealth. After BlackRock emerged as one of the primary players with its iShares Bitcoin ETF, Mallers knew it was heading straight to $1 million per coin. Thanks to BlackRock's significant influence, there's an increasingly strong belief that, in the not-too-distant future, we'll witness Bitcoin's price cross another all-time high, which will mark another historic milestone for the Bitcoin community. He believes Bitcoin has crossed the threshold into permanence and serves as the gateway for substantial institutional investments, drawing interest from sovereign wealth funds, major corporations, and even governments. Let's get right into the latest interview with Jack Mallers, as he gives his outlook and price prediction for Bitcoin and where we're headed in 2025.
How is this benefiting Bitcoin? Stablecoins and Bitcoin grow in tandem. The fastest way to grow stablecoins is to grow Bitcoin. Okay? That's the Tether and Bitcoin have a ratio of somewhere between 2.5 to 10x. The Bitcoin market cap is Bitcoin is substantially larger than stablecoins, and the fastest way to grow stablecoins is to grow Bitcoin itself. And so the US is going to try and solve this problem by growing what they call the digital asset economy, by, quite frankly, finding new treasury buyers by growing the de facto trading pair to Bitcoin. So TLDR, nobody wants bonds. They're going to try and save it with stable coins. Tremendously bullish for Bitcoin. Gold is flipping treasuries. We are officially, I don't know how else I could put it cleanly, we are officially entering a new monetary era. And this graph here, guys, literally shows it. It is no longer hypothetical, despite stock market at all-time high, despite inflation starting to pick back up again. Does that make sense? Do you understand now? Trump versus the Fed? Do you understand now the pressure these guys are putting on Powell in a very simple graphic? This is why I believe Bitcoin is going to go up in this monetary debasement era. They have no choice but to print the money. So this is an ever more imbalanced world. A decade ago, the US would have half the world stock market. Now it's 2/3. Look at the size of this. I mean, it is just outrageous. And so for me, I mean, this is a slide that I wanted to put in just to showcase that, be careful in stocks, okay? It's not clear to me that equities are going to perform like people think they will. They'll perform in nominal terms. In dollar terms, they'll perform. They have to. The US needs stocks to go up to get the tax receipts to finance a lot of their debt and payments. So the stock market has to go up 10 to 15% a year forever, according to the current financial system we're in. That's why you've got the S&P 500 at 10 to 14% CAGR. That's what it is. But the S&P 500 gets demolished in Bitcoin terms. Bitcoin's CAGR is 50 to 60%. And so be careful, because you might find yourself buying what a lot of money is selling. Look at how much money might have to sell to finance domestic crisis or finance payments to the United States. The stock market is a global savings account. The US dollar is de facto backed by two things, the US military and the S&P 500. And the S&P 500 is really made up of these 6 companies. So this is Bitcoin against the SPX. The question is, what's the fastest horse? What's the scarcest horse? What's the most divisible horse? What's the easiest horse to save and trade? That's a global horse. It's Bitcoin. It's Bitcoin. Bitcoin's going to continue to absolutely demolish stocks. Bitcoin is governed by the physical realities of the world. You cannot just print these things. Now, when the US divorced itself from the gold standard, it allowed to be printed out of thin air, these US dollars. When we decided to do that, and we decided to be the world reserve currency, we took on the role of exporting our currency. That was our primary export and still is to this day. So we run what's called a twin deficit, okay? We run these deficits where we export more dollars than we bring in. US Treasury bonds have negative returns over the past 5 years. Tack on inflation, it's even worse. This has been an awful decade for fixed income. Again, guys, it could not be more simple. The math doesn't check out. You cannot own bonds. You have a choice. You and your loved ones and the people you care about. You own Bitcoin, you're going to get more housing, more vacation, more food, more education, better lifespan, better life expectancy. You own bonds? Sure, you can own bonds. Listen, you can own whatever you want. I'm just letting you know, you're going to get less housing, less education, less food, less life expectancy, less everything that you want. Your life gets more expensive and unattainable when you own dollars, fiat, bonds, fixed income. I'm sorry. Bitcoin is scarcer than everything else you consume. So everything else around you gets more affordable, gets better, gets more attainable. We're not doing that. We're just hitting a button and printing money. We've hyper-financialized. If you want to make a lot of money in this country, you're a financier.
The ongoing adoption of Bitcoin by governments, institutions, and media signifies a broader recognition of its value. However, Mallers asserts this journey is just beginning, comparing the initial years to the current widespread interest and investment, with a giant spotlight on Bitcoin ETFs. Mallers highlights this being a significant development in the financial ecosystem. He also suggests that BlackRock, under the guidance of Larry Fink, leads the charge in obtaining regulatory approval for Bitcoin ETFs. Moves like this, he contends, will underscore Bitcoin's enduring relevance as an asset and its potential as a hedge against currency devaluation.
Besant, running both the Treasury and the Fed. Guys, is this a hint that the Treasury is going to start having oversight over the Federal Reserve? We're going to get yield curve control. We're going to get tons of money printing. I think Bitcoin's going to heat up. Gold usually runs first. Bitcoin outperforms. We're entering an era of monetary competition. And we're just getting started. Rocks are outperforming bonds, guys. They have to print the money. All new investment into this country has to come through printed money. All strategic relationships with those that have real, raw world commodities is going to have to come through printed money. In order to reindustrialize America, bring back the middle class, the dollar has to get substantially weaker. Bitcoin fixes this. Bitcoin fixes this. You know, one of the most important properties of Bitcoin is that there is no single individual that has any, controlling role or authority. So I love Nick. I think we're all forever in debt to Nick's contributions, even before Bitcoin. Just his work in monetary theory, monetary history, what he's obviously been able to contribute to cryptography and what has become Bitcoin. What Satoshi did was really take a bunch of independent innovations, and his innovation was combining them all in a way that worked. Here's the thing that I don't think people understand. In order to change Bitcoin, you have to convince everyone that actually runs Bitcoin to update their software. So, I remember Roger Ver had the most Bitcoin in the world, and he invested in all the biggest Bitcoin businesses, and he got all of the businesses like Coinbase to try and force change down all of our throats. But guess what? we, the people, didn't want to change, and Bitcoin didn't change. But generally speaking, the coolest part about Bitcoin is everyone's ideas, everyone's thoughts, everyone's words are judged on their merit. You're judged on your proof of work. This isn't a credentials-based system where because you were someone in the past or because you went to Harvard, like your opinion matters more. That's just not how it works. So I'm glad Nick's back because he's smart and he's been a net positive for Bitcoin, undoubtedly. But, we'll judge what he says based on merit, right? I don't know if that makes sense. But these OGs, as you call it, they don't have any outsized, they don't have any greater role than you. You can create a company just like Adam has, just like I have. You can run a Bitcoin node just like Adam does, just like I do. Anyone can be anything. And consensus is the only way to affect substantial change to the protocol. And we all are competing in a truly free market where the best ideas and the best merit, the best proof of work is what lasts. I mean, technically, Bitcoin has some inflation because there are new coins that are being minted every 10 minutes on average. However, I personally view Bitcoin as if all 21 million already exist. So, in my opinion, it's not as if we're finding new Bitcoins every 10 minutes. 21 million already exist. It's just they come out over time. And so, but when I think of how much Bitcoin I own, I think of it out of 21 million, not out of 19 million, something. And so from my standpoint, I think of it as deflationary, where there's only ever going to be 21 million. I own X amount of that 21 million, and everything around me is in abundance compared to the thing I own that is definitively scarce. But if you're talking about the commodity premium, like the cost to produce, mining economics, yes, there is, if you wanted to understand the natural sellers in Bitcoin, like people are putting capital up front to produce this asset, they're going to have to recoup their costs somehow.
Jack Mallers challenges the conventional economic metrics, asserting that these metrics are often manipulated to paint a specific narrative, like labor statistics and inflation figures. The ongoing adoption of Bitcoin by governments, institutions, and media signifies a broader recognition of its value. However, Mallers asserts this journey is just beginning, comparing the initial years to the current widespread interest and investment, with a giant spotlight on Bitcoin ETFs. Mallers highlights this being a significant development in the financial ecosystem, selectively measured to create desired effects rather than reflecting the true state of the economy. In this context, Bitcoin emerges as an alternative, detached from the manipulations of the conventional economic sphere. Mallers also highlights that established corporations like Apple, Amazon, and Google will use their established relationships acquired over decades to swiftly acquire substantial amounts of Bitcoin through a spot ETF, bypassing the cumbersome processes involved in procuring the actual commodity. This disparity underscores the transformative power of cryptocurrencies in traditional financial institutions. Michael Saylor underscores the importance of embracing digital currencies as the economic landscape is changing rapidly, and urges investors to leverage Bitcoin's potential to secure a more prosperous financial future. What do you think about the latest interview with Jack Mallers? And how do you think Bitcoin's trajectory in the coming months will impact the crypto market and the world of investing?